Everyone keep asking, if oil gets disrupted, does that mean the food shortages are next? The answer is yes, but not how you think, because the market doesn't react instantly to these things. There's a delay. If you understand that delay, you can actually stay ahead of the move. So let's start with this. Farming runs on energy. Diesel fuels the machines. Natural gas creates fertilizer. And fuel moves food around the world. So if something disrupts oil supply, especially around the Strait of Hormuz, energy prices goes up. But here's the key most people miss. Farmers don't feel it immediately right now. Most crops are already being planted. A lot of fertilizer has already been bought. So you don't get instant food shortages. You get, pressure building under the surface. The real impact shows up later going into summer and fall. So higher diesel costs, more expensive transportation, tighter margin for farmers, and that leads to one thing: higher food prices. Now bring it back to the market. Food price rising equal inflation staying high. And if inflation stays high, the Fed can't cut rates. Yields stay elevated, the dollar stays strong, and that's keep, pressure on stocks and even gold in the short term. So the real move isn't just oil, and it's not just war. It's the ripple effect that comes after energy, food, inflation, markets. And if you understand that, you're not reacting, you're already, positioning. So let's dive into the chart so you can be a trade smart to next trading week. Down so you better trade smart to next trading week. This is a shorter version. For those who want a longer, more detail, I'll be posting a video right after this so you can be able to have the more longer detail version of this. All right, so we did close bullish for the DXY, so we can expect price to continue pushing up. If it does continue to get above 99.989, then we could be seeing DXY continue to push up higher. And then we also have rising yields. We have rising yields constantly pushing up. We can expect rising yields to retrace down just a tad a little bit and then continue to go up higher. With these two going up higher, that put more pressure on stocks as well. And then we have the VIX. The VIX right now is at 31, which is there's a lot of fear in the market. So, and then we have oil. Oil as well is at 101. So we can, with the tension going on, we can expect oil to continue to keep climbing up. And then we have S&P. S&P is obviously dropping because there's, fear going on. So we can see S&P is constantly starting to drop. So we can start seeing this continue to drop. So last week went exactly as planned. So we can expect this week continue dropping as well too. And then on gold is kind of indecisive because, it did make a nice little drop, but we did close indecisive this week, right? Because you got yields and, dollar rising, but you also got fear in the market rising as well too. So that can put, gold in between of confused on what to do. So gold, I'm just kind of want to see how we're going to go. Now, this is a sign to could see price start pushing back up a little bit, maybe in two here. And then we see some retracement.